Four, three, two, and one. Hello, everybody. Welcome to the Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy such as the Deferred Sales Trust is an amazing way for you to eliminate the need for the 1031 exchange, defer millions of dollars of capital gains tax on the sale of cryptocurrency, businesses, investment real estate, so you can create and preserve more wealth, or help your clients, friends, and family do the same. Hey, my name is Brett Swarts, and I'm the founder of Capital Gains Tax Solutions. I'll be your host today for the podcast. And each episode, we're joined by some of the best real estate, financial, leadership, and business minds in the world, where they share their ideas, deal stories, and inspiration. So together, we can make complex tax deferral strategies simple and passive income plans achievable. We're also streaming expert CRE secrets as well. So thank you for all the commercial real estate people out there that are listening to us. I'm excited about our next guest. He is the founder and CEO of Whale Club, owner of Bunny Hill Properties, owner of Bunny Hill Builds, and he owns and operates a real estate investment business for many years, and focused on developments, fix and flips, and other investment strategies. He is based out of Colorado, and he also has a great background in all things kind of building wealth, even with crypto and different things of that nature. We're going to be diving into today's topic, which is building barbell wealth. Please welcome to the show with me, Paul Sparks. Paul, how are you doing?
I'm good, Brett. Thanks for having me.
Absolutely. And for our listeners getting to know you for the first time, would you give us a little bit more about your story and your current focus?
Sure. So I'm still fairly new to real estate. I've only been full-time actively investing for the last maybe 3 years, but I'm an engineer by trade. Got out of engineering school and realized I wasn't a very good engineer. I was probably better at sales and selling to engineers. And so I got into about an 8 or 9 year career selling to some of the largest companies in the world, like Amazon, United Airlines, Walmart. And so we were selling them technology. And this was sort of when I started developing my passion for technology. But of course, I was traveling, 2 cities a week for almost 8 years. So started buying real estate as a pretty obvious, next step in how to continue to grow my wealth. And then realized, I could probably go full time at this. Like you said, I run a community now called the Whale Club, which is focused on helping real estate investors build wealth through this barbell strategy that we'll talk about here today. I also do a good bit of developments here in the Denver market. I've got a handful of rentals and things like this, but kind of looking to get into more development deals. So actually, I'm in the process of raising money at the moment. So that's
Excellent.
a little bit.
Excellent, Paul. And by the way, if people want to learn more about Paul Sparks, you can go to realestatecertainty.com. That's realestatecertainty.com. So Paul, before we dive into the building barbell wealth, I want to take one other step back. I believe we've all been given certain gifts in this life, and these gifts can be given to us to be a blessing and help to others. I'm curious, what are those 1 or 2 gifts or maybe superpowers that you believe you were given, and how does that help how you help and bless people today?
Well, that's a good question. I like that question. I think about my biggest skill as, I don't know if it's a skill or more just what I get the most out of, which is just relationships. I think the real estate business is all about relationships, period. End of story, right? From raising money to finding deals, doing all these different things. That is my biggest skill, and I'm taking it and applying it directly to real estate at the moment, and having a lot of fun doing it.
Excellent. Love it. So building relationships, connecting with people. And you're also an engineer by trade. I imagine you can solve a problem or two. So very cool. Let's dive right into the topic at hand, which is building barbell wealth. So Paul, what is the number one secret to building barbell wealth?
Yeah, it's a good question. Maybe I illustrate this by the mistakes that I made when I first got into business. As you know, there is a ton of ways to make money in real estate. And oftentimes it can, manifest itself into these shiny object syndromes. And so I think first things first is you got to understand yourself. There's a lot of valid ways to earn, build wealth and different things, but probably only a few that are really useful to an individual playing their game. And so I think a lot of what I learned is that you've got to have clarity on who you are, what your strengths are, and just as importantly, what your weaknesses are. And I found that building a transactional based business is not really for me. I'm like I said, my biggest strength, I think, is relationship building. And so I've tried to align my strategies. We'll talk about what the barbell means, but align my strategies with my unique strengths. And a lot of that has to do with, businesses that are based on relationships and not necessarily transactions.
Excellent. So first secret is to understand thyself, know thyself, and then also realize that, hey, you can make real estate, you can make wealth in real estate in lots of different ways. But not every way is actually best fit for you. So it's kind of taking the reverse approach in that scenario. So it sounds like it's secret number one, but also know thy weaknesses as well. Is that a fair summary so far, Paul?
I'd say so, yeah. And I think that a lot of people get caught up in, I like to say this phrase of seeking consensus too early in the process. Is it commercial real estate? Is it ground up development? Is it multifamily? Is it single family wholesaling or flipping? All these different things. And all of these ways are completely valid ways to make money in real estate. But I bring it back to, what is your solvable problem? Again, as an engineer, I think of these things as, how do we create a solvable problem here? And oftentimes we pick strategies. I had a tendency to do this, pick strategies because it was a valid way to make money. When I started aligning with my own strengths, my own weaknesses, things like this, started finding a lot more success in real estate. And it started becoming a lot more fun.
Yeah, absolutely. I love that approach. It seems like it's the correct and the most sensible way to start versus the other way, right? So great. So that's secret number one: know thyself, know thy strengths, weaknesses, and realize that it's going to be you're going to be open to where that leads you to, not the other way around. What is the secret number two to building barbell wealth? And by the way, we might want to define what barbell wealth is at this point too, because people are probably wondering, what the heck is that?
Yeah. Well, I think secret number two is, you got to have we call it a toolbox to navigate. When I think about business, I think about it in terms of, it's more about, how do I make good, consistent decisions over time? I'm sure that you, Brett, would relate that, you've made a few decisions in your life that have caused you maybe to backtrack a little bit. And what I found was that although I'd like to think that my decision-making is highly reliable and, always consistent, I just found that it's not. And a lot of this has to do with, the biases that we carry, whether that's, loss aversion or, FOMO, or you see somebody else doing some strategy and, it's working for them. And I found that in the same way that a lot of us use operating systems inside of our business, I needed an operating system for my own decision making. And so I found a mentor who's now a business partner of mine. His name's Dan Nicholson. He wrote a book called Rigging the Game. It was a Wall Street Journal bestseller last year. And in this book, he outlines different tools and frameworks and things to help you eliminate the human error, right? We know that humans are the most unreliable component of every system. So I truly believe the two things that have led to success for me in business is, one, understanding those strengths and weaknesses, understanding my own biases, but then having a set of tools and frameworks to process my decision making through. And one of those is the barbell strategy, which I'm looking forward to talking about today.
Excellent. Okay, so number two secret sounds like having a toolbox or maybe an operating system for making decisions to eliminate perhaps some of the tendencies that each of us have that maybe tend to lead to error. Is that a fair summary so far, Paul? Number two.
I'd say so, yeah.
Great. Let's secret number three, or maybe define the barbell, building barbell wealth. What is barbell wealth?
Okay, so this was actually a concept originally written about by an author named Nassim Nicholas Taleb. He's a big fan of his work. And originally, this concept was written about by the Stoics thousands and thousands of years ago. And the phrase that they referred to it was a bimodal strategy for risk domestication, which is a lot of words. And so we've shortened it up to call it the barbell strategy. So everybody is probably, that's listening to the show, is familiar with a barbell. You've seen a barbell. I'd be willing to bet most people haven't seen a barbell where weight is loaded in the middle of the bar. When you're loading weight on a barbell, you either put it on one end or you put it on the other. And again, this strategy is a strategy for removing risk from a system. So of course, I like to say that the biggest risk that we all carry is not getting what we want out of life. So we use all of our investments, real estate, crypto, these different things that a lot of us invest in to help us ideally get closer to what we want in life. And so the barbell strategy is a way to remove risk from that. And so when I think of the barbell, I think of one side of the bar as my reliable, consistent, predictable part, right? It's highly stable. There's not a ton of upside, but there's also very low downside. For me, that's things like real estate. I don't know of a better way to build wealth long term than through real estate. At least that's what I call my macro belief. So there's other things like cash, gold. There's a ton of different ways, in my opinion, to have reliable, stable, consistent, generating wealth. So that sits on one side of the bar. On the other side of the bar, I like to look for opportunities to create asymmetric bets to the upside, meaning the upside is really big, the downside is very low. And of course, there's certain ways to approach that. For me, that's things like emerging tech. I'm an engineer. I sold tech to some of the largest companies for close to 10 years. And I found my way into the world of crypto and learning about blockchain and how we can integrate and use blockchain as real estate investors, how to earn passive income through things like this. And so, again, as I think about how I allocate my investments, I'm visualizing it as if it's on a barbell, and I'm trying to get things out of the middle of the bar. Things that maybe if I make this bet and it goes right, maybe we make a bunch of money and we build wealth. But if it goes wrong, we backtrack really far. Hopefully that makes sense. That's how I think of allocating my investments using the barbell method.
Okay, so make sure try to capture that. I think I got it. So the key here is to have two sides of a barbell, right? Maybe two buckets or two places or two places that you're building wealth. One of them is the reliable, consistent, not a lot of upside, something like real estate, although I guess we have to define what upside means, because you could perhaps get more upside on real estate, but but maybe just not as much as perhaps like a crypto or something that's asymmetric. They have even 1,000x kind of return, right? And I'm not quite clear on the middle part. So get stuff out. Maybe dive into a little bit more clarity on that, Paul. What you mean by that?
Yeah, let me give you an example. So for the first couple of years of my career, I was flipping houses, and what I found was that sometimes when I flipped a house, it went well, and we would make $50,000, $75,000, whatever. Sometimes we would flip a house and it would not go well, and we would lose money. And of course, you just spent 6 months and all this time and energy and effort and capital that was deployed, and you don't go anywhere. So in my mind, that is a middle of the bar bet. It might go well, but it might also go really poorly, and you don't build wealth. For a reliable, consistent, and again, maybe it's not necessarily limiting the upside. I look at it as more as like, how do we remove downside risk? And so on the reliable side, for me, that's things like rentals. We took our flipping business and we transitioned it into just a construction business where we do kitchens, basements, bathrooms, things like this for homeowners. Why I decided to do that is because we take on a lot less risk when we don't have to buy the property. Yeah, there may not be quite as much upside on it as with a flip, but instead of looking at, well, how much upside does this have? I look at it as, well, how do I remove all of the downside? So I transitioned my flipping business into a construction business. Then I decided, well, if I'm going to actually take a deal down, I want it to have multiple six figures on it, multiple millions on it, in order to justify the risk associated with that, right? So I'm looking for projects that have a much higher upside. And the way I reduce downside in these types of deals is through relationships, finding the right partners, finding the right structures of these partnerships so that my downside is fairly limited while I still have an exposure to a really high upside. Hopefully that makes sense.
Yeah, it does. I think it's a philosophy, and it's like, I could tell what you mean by, it goes back many, many, many years, right? And that you're taking what's reliable and consistent, and you're saying, hey, how to remove the downside even more on this particular part of my wealth. Maybe you'd say this would be this is my financial freedom. This replaces my expenses. I don't have to work anymore. Let's just say, for example, then you're taking the stuff that you may be doing in the middle where it's a coin flip, like flipping in a house. And you say, well, how do I even, make that not a middle of the road one way or the other, but make it a construction business and just know that's even consistent right there. And then the other side would be, then we take bigger, when we're going to equity pieces, we got to make sure we're going for, really home runs, slam dunks, home runs. Is that a fair summary, Paul?
Yeah, and those home runs are only home runs if, so Brett, I don't know if this is, let me illustrate a point, how this was explained to me. It's like someone said to me, okay, let's play a game. And it costs you $10 to play this game. And if you win $1 million. Most people are like, wow, that sounds like an amazing game. I would like to play. And let's say that you get 6 opportunities to play this game. So cost you $10 to play. If you win $1 million. Would you want to play that game?
Absolutely. That's the upside is worth any of the $10 that I could potentially lose to get the $1 million.
That's right. And so if I told you that this was Russian roulette, how would that change your decision to want to play?
If I have to lose my life, then I would say, no, thank you, Paul.
Right. And so I like that story because it illustrates that oftentimes we're just wired towards more. We're wired towards just looking at the upside. And of course, if you played a game where if you bet $10, you win $1 million, everybody's like, I would play that game without even considering, well, what happens if I lose? And I think about my investing in that way. It's like, well, if you make this bet and, 83% of the time you win, but 70% of the time you blow your head off and you can't play anymore, is that still a bet you would make? And I think a lot of us make these bets in our business constantly. So to me, it's less about how do I increase my upside and more about how do I reduce the downside, the likelihood that if I make this bet, I can't play anymore. Because we know in real estate and generating wealth, you have to make bets. You have to allocate capital somewhere. And instead of looking at like, how do I hit a home run here? We say like, how do I put myself in a position where more often than not, I'm going to have an asymmetric return to the upside. And instead, let's just focus on how do we make sure that this doesn't take us out of the game so we can keep playing.
Cool. All right, let's get practical here, right? So let's imagine, Paul, you have $10 million worth of cash right now, knowing what you know now, and using the barbell strategy. What would be your percentages of allocation for what we just talked about?
Well, I think it comes back to when I refer to the solvable problem, what I mean is like everybody wants something different. Some people want to completely retire and they don't want to work anymore. In that case, if I gave me $10 million, I would say, well, what do you need to live the life that you want to live? And let's say that you needed $1 million a year to do that. Well, I don't think it makes much sense to take any risk at that point. There's a lot of places you can get 10% return with very, very low risk to your capital. So I think it's a personal question. It's a very preference-based question. If you're asking what my preference would be, I love to play business like a sport. I think if I had $10 million in, newfound wealth, let's just say, I would continue using it to keep playing this game. I really enjoy the relationship aspect of business. I enjoy doing deals with people that I want to do it with. So I would look at it and I would probably say like, how do I take that $10 million, lock in the life that I want to live? Maybe that's $500,000 a year. That probably, that's typically the number I'm aiming for, is to consistently make about $500,000 a year and quote passive. We know nothing's really passive, but let's just call it reliable income. And boy, do I love taking asymmetric bets to the upside. I really enjoy crypto and technology and doing larger development deals. So I would probably engineer the system so that I was locking in everything that I wanted in life, and the rest of it I could use to make these different bets on projects that I was just interested in.
Cool. Got it. Okay. So let's just say 2.5 million at 10%. That's like 250,000. You're like, hey, I can cut my lifestyle down. I can live on that and and just have that completely conservative, consistent, reliable. Then the other 7.5, let's take some strategic, thoughtful with partners or things that have the asymmetric upside, that would be your risk tolerance for where you're at in today. But fast forward, if you're in your 60s, your 70s, or whatever, or something else changes in your life, that might flip, right? Where you might go, say 7.5 into the consistent and the 2.5. Is that a fair way to look at this, Paul?
Yeah, and I just think that business is about playing your game. We all want different things out of business, and for a lot of, like, for me in particular, I have no interest in just sitting on a beach and doing nothing. Like I said, I play business like a sport. I enjoy playing it, not because of winning or losing, but it's more of like an infinite game. The point is to continue playing. So I would look at it as like, well, how do I allocate my capital so that if I'm wrong on this bet, I'm not taken out of the game where I can't play anymore. And again, that's just a preference thing. I think a lot of people, there's not a right or wrong way to do real estate. There's not a right or wrong way to build wealth. First thought that came to mind when you asked me that question was like, well, maybe you align it with an 80-20 style, right? 80%, that would be a very conservative approach. 80% to reliable, take, 8 million, put it in reliable assets, earning you 10, 12, 15% per year, maybe even less, and then go play with 2 million on whatever it is you want. All these are valid strategies. I think it all comes down to like, what's useful in helping you get closer to what actually matters to you in life.
I love that, Paul. By the way, you can learn more about Paul Sparks by going to realestatecertainty.com. That's realestatecertainty.com. Check out the Whale Club, which is an opportunity to join a community of purpose-driven real estate investors and get the frameworks, tools, and mental models you need to build a winning business on your terms. Check out realestatecertainty.com. That being said, Mr. Paul Sparks, are you ready for the capital gains tax little segment of the show?
Let's do it.
All right. Knowing, what's the biggest frustration? We always start with this one. What's the biggest frustration when it comes to the 1031 exchange and or trying to exit crypto or other highly appreciated assets and defer capital gains tax?
Well, gosh, I think I finally dealt with that this last year. Fortunately, I am a real estate investor, so working with the right accountant to do that. But I think I would like to take this conversation in maybe a little different direction. Part of how we got connected, Brett, was through this crypto stuff that I'm doing. One of my business partners has a community and a project that he's launched in the DeFi space, and he's got let's just say thousands of crypto investors who all did very well in the last run. A very close friend of mine who kind of pulled me into this space, like he called me up one day and told me that he had turned $50,000 into $40 million in, crypto and trading, stuff like this. And the amount of wealth that was generated in 2021 and 22 is staggering. And what we realized was that these people have a problem now, right? They have a massive tax problem. And a lot of these crypto investors, they're not real estate investors. They're not well versed on this. And so, one of the things that we're using the Whale Club community to do is by bringing in all of these different real estate investors, we now have outlets for crypto investors to defer a lot of their capital gains. And so I see that as a major problem. I mean, there's $1 trillion, a little less than that right now, market cap in the crypto world. I truly believe we're going to see it surpass the market cap of gold, which is, I think, 10, 11 trillion right now. So, I mean, I've got a long-term macro belief in crypto. And if you believe in crypto long-term, I think they're going to see a lot of wealth generated. I also think that's going to create a lot of capital gains. So finding a way to bridge these two worlds of crypto and real estate, I think, is a worthwhile endeavor. I see this as a very long-term project. But to your point, it's a problem. It's a problem. And crypto investors are going to feel this pain more so than real estate investors that invest in crypto because they have outlets to offset a lot of these gains. But I see that as a big solvable problem worth taking a look at.
Cool. Yeah. Well, let's solve that for a little bit. If anyone's listening to right now, you go to capitalgainstaxsolutions.com. We use something called a Deferred Sales Trust, which allows you to do exactly what Paul just said. It actually fits into the barbell strategy, if you will. If you have that asymmetric DeFi, crypto explosion in wealth, and you're wanting to time, and in other words, sell when high and defer that capital gains tax. And that's the challenge. That's the bridge you're trying to cross. We can solve that using what's called a deferred sales trust. And once it's in the trust, you can invest into real estate at any time as well. Diversify back into crypto when it makes sense. Also sit in T-bills and hang out and wait around. Like, it's really neat not having to be trapped by the 1031 exchange and any of the restrictions that are involved. By the way, 1031s only work for investment real estate. It doesn't work for cryptocurrency. And so we've done a couple exits before this last crash, and we're recording this in May of 2023. So crypto took a big hit here the last 12, 18 months. But prior to that, we were at some highs, right? And with those highs, Paul, I had two clients. She worked for a big tech company in Silicon Valley. She bought Bitcoin, about $50,000 worth, went to 50 million, was able to exit 5 million at 54,000 a coin when Bitcoin was at that price. We saw it go as high as 68, 69,000. And she decided not to exit at that point. And the rest is kind of where we're at right now. I think we're around 2025 right now. Last I checked on Bitcoin, but a lot of wealth, right? But she was able to still defer a lot, right? So we exited 5, and we did another client, Ethereum and Bitcoin. He also worked for a big tech company, and mainly Ethereum. He was able to exit. A lot of his funds were in Celsius, and he's able to get a lot of it out before that whole debacle, right? Mm-hmm. And so just talk about the value of being able to sell high and buy low in and out of cryptocurrency, capital gains tax deferred, and what that might mean for someone like you, Paul, and or people that you're running with.
It's really hard to buy low and sell high, isn't it? Which I think is a case in point for the solvable problem. Meaning, like, you got to know what you're actually trying to get closer to, because crypto especially has a tendency towards just chasing more and more and more. When my buddy was sitting on 40 million and I was sitting on a few million myself, it's like we had just probably gotten a 25x on our money right there. And, he's sitting on 40 million and saying to himself, well, if we just got another 2x, we'd be at 80, right? And this is the problem, is we don't have a mechanism or a toolbox to know when to downshift. I also think it's an education problem. A lot of the crypto investors don't understand very simple things that you and I obviously understand about real estate, which is, the 4 wealth drivers of real estate. Why buy real estate? Appreciation, cash flow, loan pay down, tax benefits, things like this. They're not aware of these things, and they don't have the relationships with real estate investors to know how to downshift. And so when we started our Whale Club community back in March of last year, we saw a lot of people who were sitting on a ton of wealth. Problem was that they just didn't have the education at the time to know how to defer those capital gains taxes, right? They were just like, well, if I sell now, I'm going to be hit with this massive tax bill. So I do see it as an education problem. I see that real estate investors can solve this problem for a lot of these people, because they just dove in the pool and smacked their face on the bottom, right? They're feeling the pain of having 40 million drop back to $4-5 million, right? And they're saying to themselves, next time I'm going to take profits, but they have to know where to take profits into. These are people that don't want to just put cash in their Chase banking account, right? That's not the profile of the type of person that invests in crypto at that risk.
By the way, I couldn't agree with you more. It seems like, crypto and real estate, it's they're great for one another for all the things you're talking about with your barbell strategy, right? But they tend to like each other, like in general, right? I mean, there's of course the fringe on the real estate, like, I'll never touch crypto, right? But guess where they both typically don't like? The stock market or the traditional banks, right? In general, right? Now, of course, as a multifamily person, you want to be able to get a loan and such, so you work with that scenario. But the ability to build wealth through ways of which you can have control and you can run that is so important. We are running out of time, and I feel like, Paul, we can do a whole nother topic on this, whole nother podcast, have you on the show to dive into this. If people want to learn more about how to defer capital gains tax on the exit of cryptocurrency and move into real estate, you can go to capitalgainstaxsolutions.com. You can also get with Paul on the second part for sure. And maybe when I teach him how to do this, he'll be able to teach you this too. But you can go to realestatecertainty.com where they're educating people on how to buy real estate and all of his background crypto too. So check that out, realestatecertainty.com. and capitalgainstaxsolutions.com. That being said, Paul, are you ready for the lightning round?
Let's do it.
All right. Knowing what you know now, if you could go back to your 20-year-old self, what's the one golden nugget you make sure to tell yourself to do?
Get clarity, I would say, on your own strengths. I have a tendency to, like I said, seek consensus from other people. I think the best way to find success is to define it for yourself and to seek consensus later in the process, right? If I had made better decisions earlier on just to align with who I am, what my strengths are, what I do very well, I would have probably saved myself years and years and years of playing other people's game until I figured out how to play my own. So my advice to my 20-year-old self would be, just be you, man. Just play your game, lean into your own strengths. That's going to be the fastest path to success.
Amazing. Question number 2, what's the number one book you've recommended or gifted the most in the past year?
Probably Rigging the Game. So I've got it right here. It's like I said, it's a book that my business partner and mentor wrote, Wall Street Journal bestseller last year, Rigging the Game. And it outlines a lot of these strategies that I'm talking about here. Frameworks for making better decisions and helping you design your business to help you get closer to what you want in life.
Fantastic. Last question, because we're out of time. Paul, after all your success helping all the people you've helped, building the wealth, and encouraging and inspiring other people to build more wealth as well, what's the one practice or habit you try to practice every day or every week that helps you stay centered in your values and encourage to charge forward to reach even higher heights?
I would say, there's probably a lot of different things, but, reading and journaling are two things that have, made a massive impact in my life. I think reading coupled with journaling, reflecting on what you've just learned and what you observe in life has contributed towards my success. And I think that oftentimes those things get a little confused. A lot of people are reading just to get through the book. When I started understanding, like, you're probably better off reading a handful of books multiple times than you are reading a ton of books, and journaling about how to actually change your behavior, because that's what really learning comes down to, is how do we actually get this information to change our behavior.
Amazing. Paul Sparks, everybody. Paul, I want to thank you for being on the show. I want to thank you for sharing a ton of wisdom with us. I want to encourage you to keep using the gifts of building relationships, solving problems, and helping people think, I guess, a little differently about how they build wealth, especially with this barbell wealth, which can all get stronger on our terms. I think that sounds amazing. For people who want to get in touch with you, would you remind them one last time, what's the best place for them to find you?
You can find me on Instagram. I'm Paul Sparks Official. I'm putting out a lot of content about how I'm using these tools in my business. You can also go to realestatecertainty.com, as Brett's mentioned a few times, and check out what we're doing there in our community. If you want to get a hold of me, you can do that on that site there.
Amazing. Thanks, Paul. I also want to thank our listeners for listening to an episode of the Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. They also struggle with sometimes clarifying their frameworks and their tools and their teams to help them build wealth in a bigger way, or in a way that suits what they're trying to achieve and the freedoms in their life. And so connect with people like Paul Sparks is an amazing way for you to create and preserve more wealth. Also, to defer capital gains tax and build more wealth, go to capitalgainstaxsolutions.com. Check out the new book. We also just hit #1 bestseller, not quite on the Wall Street Journal, but it was on Amazon, right? And it was the wealth category, and it was the real estate category. So we're proud about that. It's called Building a Capital Gains Tax Exit Plan. And it's the proven playbook for exiting highly appreciated assets of any kind, for yourself or for your clients, so you can create and preserve more wealth. Go building a capital gains tax solutions.com. Building a capital gains tax solutions exit plan. Go to capitalgainstaxsolutions.com. Although I probably should get that URL as well. Don't take it if you heard this here. Thanks so much for watching, everybody. And we promise to do better next